Hi, and welcome to my channel. For those of you new, my name is Dave and I work in financial services, and these videos are a mixture and journey towards my financial freedom. They will cover financial products and they will also improve your financial well-being so you, like me, can reach your financial goals sometime in the future. Now let's get into this latest video. This week's video is about my self-invested personal pension plan and the review for the month of June 2022. For those of you new, the plan is in a year-on-year growth of 10%. For 2022, we're looking for annual dividends of £4,000. We started off with a valuation of £100,000 and we're looking for a year-end figure of around about £120,000. Let's look at the figures in date then. Now, our portfolio has somewhat struggled, mainly because the reactions in America. The FTSE not as down much in the UK, but in America's markets, Nasdaq's are over 20-30% down. Has affected global shares across numerous countries, which has obviously affected our portfolio. Now, for the start of the month, we had a valuation of £94,947. The end of the month, it was worth £88,885. A loss in the month of £6,062. Start of the month, the year to date, we were down 2.56%, so not that bad. The end of the month, we are now down 13.98%, so not a very good month. During the month, we made normal contributions of £200 on the first of the month, of which the government would top up with tax relief of £50. We incurred monthly fees from our provider of £13.65. If we look at the following chart, an overview of which sectors or countries we hold. So predominantly UK based. 86.07% is in the UK and Europe. 11.89% is in the Americas and 2.05% is in Asia. Now, with regard to dividends, we received some very nice dividends, £315.01 in the month. Now, we only recorded dividends across our shares, but across our 16 shares, we received a yield or receiving a yield of 3.59%, and the year to date, our dividends of £1,920.41. So during the month, we received the following dividends. Legal and General, £129.38. Reinvested 49 new shares at a cost of £1.50. Greggs, the retailer, or the bakers, £113.82. 5 new shares reinvested. AG Bar, the drinks provider, £18.20. We kept in cash because it's not worth reinvesting dividends. BP gave a quarterly dividend of £23.60. And Shell gave a quarterly dividend of £30.01. So, halfway through the year, we're nearly at our annual dividends, as expected, of £4,000, based upon a month-by-month rota basis. Now, we're just going to dive into where our holdings are within the portfolio. So, if we look at our shares, at the moment we own 16 shares, 8 in profit, 8 in loss. The total shares makes up 81.08% of our portfolio, and it's worth £71,947, of which 67% is in the FTSE 100 and 14.28% is in the FTSE 250. Not going to go through all 16 shares, but just a quick overview. Our largest holding is Aviva, somewhat restructured lately. We now own 4,208 shares, nearly £17,000, 19% of our portfolio. Our next holding, or largest holding, is Lloyds the Bank, 32,729 shares, nearly £14,000, 15.58% of our portfolio. Our next holding has struggled somewhat recently. It's Stract, the power plant, the biomass maker. 1,189 shares, £7,645, makes up nearly 9% of our portfolio. But it was originally, until the start of the month, in profit of over 100%. But a very good cash-rich company has increased dividends, has been on a buying spree, and we all need energy moving forwards. Our next holding is HSBC, 1,059 shares, £5,600, 6.38% of our portfolio. It was bought for global diversification away from our UK banks. But again, very cash rich, and it will pay a good dividend in future. Our next holding has somewhat struggled recently is Greggs. It was over £33 a share, now hovering about £19 a share. But it has had some very good results. It is very cash rich, and it did pay a very good dividend and a special dividend in recent times. We topped up our holding with 5 new shares through the dividend. We now own 276 shares, £5,000, 5.6% of our portfolio. Other shares of note, we own Barclays, 2,904 shares, 4,500, 5% of our portfolio. And the next holdings, all about 3%, is Shell, £3,200, Legal & General, 1,225 shares, £3,000, and JD Sports, £2,500, just under £3,000. And we did actually top up Legal & General during the month, 98 new shares at a cost of £247, but it is giving a very good yield of 7%, and it did give us a very good dividend in the month of £130. Other holdings we own, shall we say, AG Bar, Card Factory, Sainsbury's, okay, AJ Bell, and John Menzies, which is it has been agreed by the takeover. The court date's gone through, so hopefully we will receive the settlement very soon in the third quarter of 2022. Simple share, we put £1,000 in, somewhat lucky with the takeover, but it's now going to give us a profit of £1,500 when it sells out, so we will reinvest that into one of our existing holdings. Now, all our shares, okay, some good shares, some bad shares, some very cash-rich dividends, all bought for long-term hold. We saw no reasons why we're going to sell any of them shares in the short term, unless something is fundamentally wrong with the company, or the market sentiment has changed to that company, or the management when changing the company. Now moving on to the funds within our portfolio. The funds have really struggled in the past 2 or 3 months. We do own 6 funds. Till recent times, all 6 funds were in profit. We've now got 1 fund in profit and 5 in loss. Makes up 18.9% of our portfolio. It was done because we were so UK based. Total funds collectively worth £16,791. And if we look at the following chart, an overview of where we hold them. Our largest holding is a Legal & General Technology Fund, £5,100, 5.7% of our portfolio, but during the month it is showing a loss of £300. The technology sectors have been battered in America this past 6 months, hopefully a short-term blip, but it does own some good quality companies, but unfortunately somewhat nervous uncertainty about the state of the American economy. Obviously tech stocks have suffered past few weeks and months. Our next holding is again America. It's a US smaller companies, £3,500, nearly 4% of our portfolio, and again in the month a loss, but this time £200. It was showing a very cash-rich profit until recent months, but again driven by sentiment in the US, the S&P 500, etc. Our next holding is somewhat selective, Bally Gifford Positive Change. Based in pioneer companies, green credentials moving forwards, quite selective, 30 to 35 stocks, £3,000, 3.38% of our portfolio, and again in the month a loss of £200. Our next holding was bought for diversification in the UK. It's a UK equity fund, £2,400, 2.7% of our portfolio, and in the month, a loss of £100. Our next fund, it has struggled lately. It's down about 20% this year. No real loss this month, much to my surprise. It's a global growth fund. £2,068, 2.38% of our portfolio, but it was done to give us a fund with diversification across numerous countries and sectors. And then down to our smallest company, a UK smaller companies. Now, normally smaller companies will outperform larger companies, but they've been, shall we say, struggled in the past few months, past 12 months, especially in the UK. We put £1,000 in the fund. It's now worth £766, makes up 0.86% of our portfolio, but in the month alone, it is down £100. Obviously affected by sentiment in the UK. So quite a collection of funds, say 6 funds. They were all in profit originally, but we saw no reasons, although markets are not having the best of 2022, we see no reason at all why any of these funds should be sold at a loss. And if need be, we will increase existing holdings in the future, depending on where we allocate our cash. So, just to reiterate, our fund has struggled during this month, down nearly 14%, but it has been probably the worst month we've had since we're invested, but a short-term blip. Remember, the aim is for a 10% return year on year, so we'll have good years, we will have bad years, but we will reach our market objectives if we stick to our investing principles. Now remember, if you like the videos, smash the like button, subscribe to this channel, and we'll see you again in the next video.